Risk management for trading. Proper management of risks is the main principle for successful trading. Risk management methods. It is necessary to establish an acceptable level of risk before developing a trading strategy. Determine for yourself the acceptable risk level. A trader should limit his risks at the stage of development and testing of a trading strategy. The maximum risk of the loss of funds shouldn't exceed 5-6%. No matter how attractive the transactions are, stick to this rule. Choose an optimum leverage. The leverage size shouldn't exceed 1 to 100. Keep in mind that the leverage may work not only in favor of a trader but also against him. Use moderately risky leverage to earn. Use stop loss and take profit orders. Any news or event can reverse the trend. Place stop loss and take profit orders to protect your investments. Control your emotions, keep calm, don't succumb to the passion. Stick with a strategy. Whatever happens in the market, close the deal in accordance with a pre-made decision. Diversify the risks. Invest in instruments with different risk levels. Compensate the loss of some instruments by the profit of the other ones. IFCM Markets Company offers traders a great way to diversify risks with portfolio quoting method. Stick to these simple rules and success will not take long.